Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing jargon of corporate filings and give you the real story. This week, we're looking at a report that is all about boosting how much stock a company can hand out and a big vote on its future direction. It seems like someone's been busy cooking up some new plans. If you like getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we break down these reports even further. Today we're diving into a Form 8K filing from Intelligent Biosolutions Inc. Now Form 8Ks are super important because they tell us about major events that happen at a company that shareholders need to know about right away. Think of it as the company's urgent bulletin board to the public. This particular one dropped on the 21st of October 2025. And it primarily covers a big annual meeting where some key decisions were made. Intelligent Biosolutions, or IBS Inc., as we'll call them from now on, had their annual stockholder meeting on the 16th of October 2025. This meeting is where the folks who own a piece of the company get to weigh in on important matters, elect directors, and approve major changes. The biggest news here is that the shareholders approved a sweetener for their long-term incentive plan, the 2019 plan. What does that mean in plain English? Companies use these plans to give stock or options to employees and executives as a way to reward them and tie their success to the company's success. Shareholders voted to increase the number of shares available for this plan by a significant chunk, adding 495,000 shares. Before this, they had 1.3 million shares set aside, and now they're bumping that up to a total of 1.795 million shares. This is often done to attract and retain top talent, but it also means more shares can be issued, which can potentially dilute the ownership stake of existing shareholders if not managed carefully. The meeting itself was held virtually, which has become quite common. Out of the total shares outstanding, about 49.65% were represented at the meeting. This is a decent turnout, showing that shareholders are engaged enough to participate, though it is always best to have as close to 100% participation as possible for major decisions. The report shows that all the proposals put before the shareholders passed. This suggests a pretty smooth sailing for management's agenda at this meeting. Let's look at those proposals. First up, the election of directors. 4 nominees were up for election and they were all approved. It is important to note the voting breakdown for nominees like Jason Eisenberg and Nicola Fraser. The votes for were significantly higher than votes withheld, indicating strong support. For Stephen Boyages and Jonathan Hurd, while still approved, the number of withheld votes was a bit higher relative to other nominees, and the broker non-votes, which are shares held by brokers who haven't received instructions from the beneficial owners, form a very large chunk of the total. This is something to keep an eye on, as it can sometimes signal a lack of strong endorsement or potential for future shareholder activism if these trends persist. Next, the shareholders officially approved UILP as their independent auditor for the upcoming fiscal year. This is a standard procedure, and it passed with a huge majority of votes for compared to votes against, with very few abstentions and no broker non-votes. This indicates confidence in the auditing firm. This brings us back to the big one, approving the increase in shares for the long-term incentive plan. While the majority voted for this proposal, there were a substantial number of votes against and a significant number of broker non-votes. When you see a considerable number of votes against on a plan like this, it can suggest that some shareholders feel it is too generous, potentially dilutive, or that the terms aren't aligned with shareholder interests. The 2.6 million broker non-votes here are particularly noticeable. It means that nearly 30% of the outstanding shares as of the record date weren't voted by their beneficial owners, which, in this case, isn't enough to block the proposal, but does show a segment of shareholders either don't care or are being represented by brokers who didn't vote. This proposal is about issuing a large number of new shares, over 4.1 million, to cover the exercise of warrants. Warrants are like options, giving the holder the right to buy stock at a certain price. Issuing this many shares, which represents 20% or more of the company's stock before the issuance, needs shareholder approval under NASDAQ rules. This also passed, but again, there is a decent number of votes against and a substantial chunk of broker non-votes. Similar to the incentive plan, issuing such a large block of shares can significantly dilute existing shareholders if the company doesn't see a corresponding boost in value or growth from these activities. Now, this is a really interesting one. The shareholders approved a reverse stock split. What does that mean? Imagine you have 10 shares of stock and the company does a 1 for -10 reverse split. You'd end up with just 1 share, but that 1 share would be worth 10 times more than your original share was. Why do companies do this? Typically, it is to boost the stock price. Nasdaq has minimum bid price requirements, and if a stock falls too low, it can be delisted. The company here is giving the board the flexibility to do a reverse split anywhere from 1 for -2 to 1 for -2 to 1 for -10, depending on what they think is needed to get their stock price back up. This proposal got a very strong votes for, indicating shareholders understand the need to stay listed on the exchange. However, it is crucial to remember that a reverse stock split doesn't fundamentally change the company's value. It just changes the number of shares and the price per share. It often signals that the company is struggling with its stock price. This proposal was to allow the meeting to be adjourned if there wasn't enough support for the warrant exercise proposal. It passed, and it is a standard precautionary measure. Similarly, this was to allow for adjournment if there weren't enough votes for the reverse stock split. This also passed with strong support. Finally, under exhibits, they've attached the actual amended 2019 long-term incentive plan. This is where you'd find the nitty-gritty details of how that plan works. But for us, the key takeaway is the increased share pool. So what is the big picture here? Intelligent Biosolutions is clearly working to incentivize its team and maintain its listing on Nasdaq. The approval of the reverse stock split proposal signals a current concern about their stock price. While the increased incentive plan is standard practice for growth companies, the significant votes against and broken non-votes in that area could suggest some shareholder unease about the generosity or potential dilution. The warrant exercise proposal also shows a need to raise capital or fulfill obligations, but again, the voting patterns raise questions about how much this might impact existing shareholders. Ultimately, Intelligent Biosolutions is navigating the typical challenges of a company aiming for growth and public market compliance. The key will be whether these strategic moves, like adding more shares to the incentive plan and the potential reverse split, translate into tangible business improvements and a healthier stock performance. Without seeing the financial statements for this period, it is hard to say definitively, but these proposals are reactions to pressures the company is facing. What is your take on these proposals? Do you think the expanded incentive plan and the potential reverse stock split are good moves for shareholders? Drop your thoughts in the comments below. If this breakdown was helpful, please hit that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community for more discussions. Thanks for watching, and we'll see you in the next one.